Okay, hey everyone, welcome back to our news trading session. Hey Alan, how are you? Let me know if the audio is coming through okay. I think there were several issues in the last session where I think the audio was a little bit on the lower side of things. Okay. At least on my side, it's coming through okay. Welcome back. And I think it's a quiet time at this point in time, so I think we could use this week to talk about some theories and practice as well. I know there were several new viewers on the live sessions in the past 2 months, and you guys are probably wondering, what actions we took, why we do that. So that's basically the session for tonight, and that's basically what we are going to cover. We'll talk through about some theories and then some of the patterns that we're looking out for before, we can actually place those trades like we did during the live trading sessions. All right. Just a quick reminder, the CPI number is actually going to be released on the 15th. That's going to be on next Tuesday, all right? Okay, let's get this through with a quick disclaimer first. Leverage trading involves risk, and so you should trade responsibly. Even without risk, you should be trading responsibly. Regional restrictions apply, terms and conditions does apply. This is for educational purposes only, it's not a financial advice. And do keep in mind that past performance is not indicative of future results. Okay, I'm going to show you the code to double your deposit bonus. So make sure you take down the code and use it when you need to. And you should already have access to the private Telegram channel if you have attended all live training sessions before, or you registered for this webinar through Octa's website. Then you should get an email with the link to access the private Telegram channel. If not, or if you're watching this sometimes later and not doing it live, feel free to contact the customer service and they'll be able to provide the link for you guys there. Okay, it's actually very useful in terms of the Telegram channel here. We put out news updates, several trading strategies as well out there, so I think it's beneficial to just keep abreast on a lot of the stuff that's going on in the world, and particularly in the Forex market. There's a lot to cover. Okay, this is a code. It's on Farm 2025. Make sure to use the code when depositing into your Octa trading account, and I believe this is a one-time use code. For several years I thought this was a code that you can keep using over and over, but I think I just recently found out that this is actually a one-time use code. Okay. Promo code is good until the 31st of December 2025. Okay, just a little bit about myself. My name is Vera Njero, and I am a global micro strategist. I'm also an institutional market analyst, and my expertise is in the Ichimoku Kinko Hill, and in Australia, I am one of the Ichimoku specialists there as well. Okay. I have over 20 years of professional trading experience. This is across Forex indices, commodities, futures with institutional grade executions. I'm also a former head technical analyst at GFD Markets, which is now Gain Capital. Basically working alongside with Kathy Lian and Boris Schlossberg, which, if you're old enough to remember them, or if you are a regular on watching CNBC, you probably still see them there contributing there. Okay. I'm also the ex-head strategist for Invest Japan, designing structured macro playbooks, as well as technical FX strategies for Asia's advanced brokerage environment. And I do manage my funds. I don't do retails. We do family office portfolios. And there was a lot of question in terms of, what kind of money are we talking about here? Right now, it is over 20 million in terms of AUM that I am handling at this point in time. Okay. All right. The rest is pretty much, the stuff there. You can Google my name. A lot of this stuff is going to pop up anyway. But yeah, I do contribute to BBC UK, Channel News Asia, as well as CNBC and Bloomberg as well. Okay. All right, I want to talk about advantages and disadvantages of niche trading. I think there's a lot going on right now, and we want to talk about the differences later on, but let's talk about the advantages first, okay? So the advantages to niche trading, and let me define this for you, okay? Because I think a lot of new traders are probably going to be confused. They thought, oh, niche trading it's fundamental analysis. It's not. News trading is a completely different thing. It's not really, it doesn't fall into a fundamental analysis, or it doesn't fall purely into a technical analysis as well. You do use technical analysis and fundamental analysis to help you out with news trading, but in and by itself, it does has its own quirks, I would say. Okay. So let's talk about the advantages first, and this is what we're looking out for when it comes to news trading. Obviously, we are going for that high volatility, meaning that you could potentially get a higher reward out of it. So major news releases, they do cause strong price movements. It does create multiple trading opportunities in a short period of time, and that's kind of a textbook definition between what a trader is and what an investor is. So I think it's a good question. It's a good question to ask yourself. You know, are you comfortable with that high volatility, or are you going to be, you know, trading with Octa as a trader? Are you going to be doing it more for investment purposes? You know, it doesn't suit everyone. So let me clarify one thing first, right? If you think you're a trader, then you'll be very comfortable with the high volatility. In fact, you are going to be looking for that high volatility because as traders, especially you know, short-term traders, day traders, we are going to be looking for that high volatility. Otherwise, you know, if the market is not volatile, then we're going to be stuck in a range, and it could cause a lot of problem down the line as well. And a lot of traders are not conditioned to stay too long in the market, I would say. You know, I think one of the major reasons why people are actually trading intraday is that they want to get in and out quickly off the market, and that's how it was conditioned, right? So, you know, if you open a position, it doesn't get into your target, it's stuck, it doesn't go up, it doesn't go down. What do? You know, we start checking charts every few minutes or so, you know, and we keep updated on the news, and that causes a lot of anxiety, right? So you know, let me just warn you on this. If you have that anxiety issues, then, you know, you should probably not trade the short term. Okay. All right. News trading is also time efficient. Trades are very often short-lived, with setups forming and resolving quickly after the news. Typically, when we do our live trading sessions, I don't like leaving the position running overnight. All right. It typically doesn't end too well, and we try to get in and out as quickly as we can. And the record that we have here, I think it was about I don't think it was actually last year. I think it was about a year, more than a year ago, that we actually did a 50 seconds trade. We got in, we got out, and done. Right, it was one of the fastest. All right, clear timing. You know, it's exactly when the release happens, right? We check economic calendars. We know when those news are going to be released. So, you know, the preparation is structured. It's not like, oh, we're just opening up our chart, randomly waiting for the news to happen. It just doesn't work that way. We know, for example, I told you earlier that we are going to be trading the CPI numbers live on the 15th, and that would be 8:30 a.m. New York time, which is about an hour before the US market opens. Okay. All right. We also have directional conviction as well, and news often aligns with market concessions. This reduces indecision in trend direction. So yeah, we don't like surprises, but what I really find here is that, you know, if you are able to kind of figure out several scenarios before the news is released, you're actually prepared for when the data does meet consensus, or it causes a little bit of a surprise. For example, last week we have the NFP numbers, and that was a surprise to the upside. we were looking at a really bad number for our unemployment rate. We got a positive surprise instead, and the market reacts to it. But because we prepared a lot of scenarios, what if this happened? What if that happened? You come prepared. It's not that hard to figure out, right? It doesn't take forever to kind of figure out what news trading is, okay? All right, it also works with both technical and fundamental, all right? As I said earlier, this is kind of somewhere in between, right? Some people use technical analysis to trade the news. Longer term traders are going to be doing their fundamental analysis. So longer term traders are probably going to be doing that post trade. Technicals are probably going to be doing it, before the news is released or during news releases. But yeah, you can combine it easily with smart money concepts, which we have a series done here on the on the YouTube channel here. So you just check it out on the playlist. Understanding supply and demand. You can use trendline setups, whatever you want, right? Fibonacci, momentum, divergences, all those materials. It's already prepared by yours truly for this channel here. So just look it up on the channel there. Okay. All right. Basim didn't get the Telegram invitation. All right. So if the team here, if you can help you out, then yeah, it'll be great. Okay, let's talk about disadvantages first. Sorry, we already talked about advantages. Let's talk about disadvantages next. Obviously, with high volatility, you'll get your unpredictable spikes, right? And is that bad or is that good? We like that high volatility, but if the number we get a sudden spikes in the market, what could happen is that you could actually get a little bit of a slippage happening. That means, like, for example, you have an order placed at a very particular price level. Because the market, maybe it might just jump up, it might just gap up. Your orders might not get filled because, liquidity dries up as well during news releases. A lot of people are just trying to get in and out of their positions. So it might be a period where you might not get your orders filled at the correct level, and most of the time I wouldn't really call it a slippage, but it would be defined as a slippage. And the reason for that is because the spread could actually widen up, right? So for example, on the Euro USD on a normal day, what kind of spread are we looking at? Maybe we're looking at 1.5, or maybe less than 1. But during news releases, if it does affect the euro, if it does affect the US dollar as well, then we might get the spread widening up a little bit, right? 3, 4, that could happen. So instead of getting it filled at one particular price level, you might actually get filled, 5 pips up or whatever, not this, depending on whether or not the spread widens, right? Now, the other disadvantages is that this requires precision, right? And I don't usually put this in the older slides. I don't put in the precision part, but entering even a few seconds too early or late, this can actually result in poor fills or invalid signals. So just keep this in mind. And this is partly because of that potential for price spiking up in one direction or the other, potential for spreads widening up a little bit, right? If you go in, let's say, before the news gets released, what if the news has a little bit of a surprise? What if the news doesn't come out as per consensus? You could actually get into the wrong positions. Or, we didn't get filled in during the time, maybe prices rallies up, maybe it started running 10, 20 pips, and then you start, thinking, oh, should I go in or not? Right? By the time you got in, market has already been running for 10, 20 pips. You're kind of a little bit on the, a little bit late to the party, I would say, right? So it does require precision, and when we talk about precision in the market, it's not an easy thing to do. I think this is where a lot of new traders kind of fail to grasp the idea of news trading, right? Because they need to make that decision very quickly, maybe even less than half a second to get in or out of the position, right? And I wouldn't blame them. I think this is more of a trading mentality kind of thing. It's more psychological. So it does take a little bit of work in terms of being really disciplined, right? You need to get in, you need to get out, right? We'll talk more about this on the last point, but yeah, it does require positions. And then we have that with our risk as well, right? Where price may actually fake out in both directions before committing to a trend. We typically see this a lot during the labor data. We don't see this a lot during these inflation numbers, but yeah, there's always that with our risk as well. Okay. Sometimes we didn't get any reactions as well. When we don't see the market, move our break out of the range, then we don't trade. It's as simple as that, right? You know, we actually saw that for I think about 2 months. January, I believe it was January and February, or it could be February and March, just before tariff, becomes an issue, right? Big news releases. We got a positive gain in the NFP numbers. We got unemployment rate going up. Interest rate decisions made by the FOMC. We didn't actually see the market move a lot, so the market kind of just ignored it. And the thing with the market is you have to understand that typically with sentiment in the market, people like to price ahead, right? So, for example, for this year, everyone's just hoping for the FOMC to start cutting interest rates. But, we look at the data, and then we had that FOMC meeting minutes last night. We didn't actually see that from the FOMC. They're not really in a rush to aggressively start cutting interest rates. I think from the FOMC meeting minutes, if we break it down, the Fed members were kind of divided. Half of them was saying, "Oh, we'll probably do one cut," and then one says, we'll probably do a couple. This is where the line gets blurred, right? What does a couple mean? Because in definition, a couple would actually mean, one or two, right? At least two. But yeah, I think some traders would look at that couple and say, oh, it's not really a couple, it's not really a pair, it's not really two cuts. Maybe they'll do three, maybe they'll do four. They start running wild. So that's how news is, okay? And last point, again, as I said, it's, I would really love it if you are a beginner and you attended our live trading sessions. That way you kind of get the understanding, you'll get that feeling, okay, this is how it works, what we're looking at, right? I wouldn't say it's actually for a beginner, 100% for a beginner. It's not hard, don't get me wrong. It's not hard, but, it's not for beginner as well, because it does require you to have that experience to handle that speed and volatility with discipline, right? So new traders just doesn't have that discipline, and I think that's the only minus out of the whole news trading thing. I mean, if you are someone that's very highly disciplined, depending on your work environment, I would say, in terms of how you got brought up as well. Some people just comes naturally disciplined, right? Maybe they attended military academy, for example, then yeah, they're very disciplined. If you work as, if you're an accountant, for example, then I think you're conditioned to be disciplined as well. You're going to be looking for that one mistake and trying to fix it. If everything doesn't align, then you just don't trade, right? Again, it really depends on your background as well. But if niche trading is 100% for beginners, I wouldn't do that. Because if you're new, and here's the problem, right? Because I get a lot of people telling me, right, one of the few experiences that they have is they started trading, and maybe the salesperson that brought them into the brokers, they start telling them, to start during news, you can make a lot of money during NFE and whatnot, or maybe if you're following signal services, people selling signals and whatnot, it's not really a good experience. And I think majority of new traders, they just heard from their friends, oh, I traded gold, for example, during non-farm payroll, made a lot of profit very easily. It just doesn't work that way, okay? You need to know what you're doing. You need to know what the news are going to be. And you can't just randomly, trade during high volatility without even figuring out what the market is doing, okay? Okay. let's talk about type of market moving events. I think we're a little bit behind. So we got a hot or unexpected news. These are your unplanned events that often causes sharp market reactions, and we saw all this basically in the past in the past 6 months, right? So we got terrorist attacks. That would be included the unplanned. And we got military conflicts, which is the issue that we had with India, Pakistan, Ukraine, Russia, Iran, Iraq, right? So yeah, military conflicts does create a lot of issues as well. And then we got natural disasters happening. I think the latest natural disasters that was actually in the news was, I think it was a little bit of a flooding in the U.S., but at this point in time, it doesn't really affect it much yet, right? But yeah, all these are unexpected news, and we can also include Trump's tariff issues right now. That would be in the unplanned news because Trump being Trump is just being so random at this point in time. We just don't know what's going on. If he causes a lot of concern, right? Sending out letters to different countries on Monday, and also more coming out today as well. Deadline for tariff was supposed to be yesterday. He postponed it back to push it back to 1st of August. And then now he's saying 1st of August is final. If people doesn't deal with them, we'll set the tariff unilaterally, and we'll charge them tariff on the 1st of August. At this point in time, it's to the point where market kind of just ignore him. But yeah, could that impact the market? Of course, it could impact the market. Okay. Now, typically with negative news, right? If news are negative, what we get in the market is that we get risk sentiment being negative. This is what we would call a risk-off environment. Then risk assets, for example, like the sterling, like the U.S. stock market, they would lose in value because everyone wants to go to safe havens when something negative is happening in the market. As simple as that. Okay. So the opposite is true. If something good happens, for example, Trump says, "Hey, no tariff for everyone," then everyone is going to be going back to the risk assets, and people would just dump gold, for example, because they say, "Hey, everything is good. Why should I be buying gold? I'm not really concerned that something negative is happening in the market." So we have to look at it from the perspective of safe haven currencies, whether or not it's actually going to strengthen or is it going to weaken. Okay. Okay. Now, the other type is what we are here for. These are our scheduled or periodic news. These are regularly published economic indicators and central bank communications, like last night's FOMC meeting minutes. We got central bank meetings, interest rate decisions. This is going to fall into that. We know when they're actually going to be released. We got inflation indicators. We got a CPI next week on Tuesday, and then the PPI, as well as the current CPI as well. And then we got the quarterly GDP numbers. And then last week we have the employment data, which is the unemployment rate, non-farm payrolls, average hourly earnings, right? And I believe right now, in about 3 minutes time, I think there's weekly unemployment claims as well, right? Okay, and then we got the business activity indices, right, from the ISM, PMIs, and whatnot. We got the services, we got the manufacturing numbers. So these are the scheduled events, okay? Okay. So let's take a look at some news. I would classify this as the most profitable news events to trade. Not all news are going to be created equal. For example, the weekly unemployment claims that's about to be released right now, I don't think it actually has the same impact as the events that we have listed here. So I think this is a quick shortcut if you guys want to look at this, right? What should you be trading? If you want to look for that high volatility. We got CPI numbers, inflation numbers, right? Why is it profitable? Because it basically, inflation number drives central bank interest rate decisions, okay? And typical market reactions to that is that we typically get a very strong US dollar reactions. It does have an impact on gold and the Forex market as well. The NFP number, which is the jobs reports number, this includes the unemployment rate as well. It triggers volatility across all USD pairs. Sometimes the stock market is also going to be affected. The indices are going to be affected. The US 30 gold and Forex typically spike as well, right? Out of all the interest rate decisions, I would say the FOMC and the ECB, these two are going to be moving market a lot. If you trade the Japanese yen, then yeah, you should be listening to the Bank of Japan as well. So direct interest rate movement here, what we typically get with the FOMC here is that we get huge dollar volatility, and then we have the impact onto the equity market as well as the bond market as well, right? Typically we get a little bit of a whipsaw if it does cause a lot of negative concern, right? Okay, then we have the GDP reports. This reflect overall economic health. If you're wondering if the country is going to a recession and whatnot, then you should be looking at the GDP numbers. Okay, the PMI, ISM indices. This is good if you want to be looking for longer-term trades. I don't think unless it's negative, this would cause a lot of issues. And manufacturing numbers in particular. If you take a look at the ISM PMI numbers, we basically look at whether or not the value is above 50 or below 50. If it's below 50, then we look at the potential for the economy to start shrinking, okay, instead of growing. So these are your most profitable news events to trade. And if you're new to trading, we have a lot of news, right? I'm not going to lie to you. I mean, let me just bring it up and, just show you what the usual economic calendars looks like. And just for now, we just got the initial jobless claims. It's at 227,000. This is 235,000. That a lot of people doesn't even know how to actually look at this initial jobless claims. What's the point of looking at this, right? And what's the difference between continuing jobless claims, initial jobless claims, 4-week average? There's a lot of stuff happening here, right? It just happens every time. We got a lot of news coming up from the US, but does all of this have an impact onto the market? Probably not. And this is the reason why we typically like to filter it for high impact news. So yeah, last night, that would be last night for me, where I am. That would be Thursday morning. But we look at that. Of course, it is a high move. It does move the market a lot. And then for tomorrow, we have the UK GDP numbers, and we're done for the week, right? And we wouldn't see anything until next Tuesday before our inflation numbers is going to be released. So if you look at all this news and you didn't filter it, then you'll be all over the place, because not all news are going to create that volatility. And that's the reason why we have just a quick list here that you guys can use, okay? So this is more of a cheat sheet. Thanks for the link, but it's not in English. Yeah, I think the team might have been mistaken. I actually do post on the Telegram channel for the Bahasa Indonesia. It's not in English. That's actually an English channel that everyone should be getting the link to. So yeah, team, maybe you send the wrong links out. Could you please send the English links, please? Thank you. Okay. All right, those are news aside. So let's start going to more on the technical side of things, right? Now, let's take a look at this. And this is what I would call the phases of price movements. They're not, I wouldn't call this a sideways uptrend, downtrend. It's different. We have to look at it differently. The example here is obviously in an uptrend, but you can reverse it and you'll actually see the opposite to be true as well. Now, this main phases basically tries to tell you, at least, for when you look at the market, where is price at, right? Is it at the accumulation part? Is it going to be at the participation part? Or is it going to be really rallying up and then that's a distribution part? And the reason why I need to explain this, and I know a lot of people that comes in here, they thought, this is boring, just move away. I don't really explain this much outside of the news trading session here, but don't think of this as an uptrend, downtrend, sideways kind of thing. It's not, okay? So typically, what happens here, before the news gets released, you should be looking at a period where it is actually flat in a range bound market condition. This would be the accumulation part, because people getting in and out during the accumulation part, they have information that the public just doesn't have, right? So I wouldn't say it's 100% fair that retail can actually compete with institutions. We get prices differently. We also get news differently in terms of when we might actually get a leak and stuff like that. So yeah, maybe we have that team where we just pay good money to a lot of top analysts. They're able to predict prices much better than retail traders with not a lot of experience. These are unfair advantages, I would say. But that's basically where the big monies are going to be in. They don't do that. They don't open and close a position during the participation phase, because they already have that during accumulation, right? And it's literal in terms of it is saying their accumulation. So big funds, they don't get cleared out in one go, right? They could be trading a lot of lots. This lots doesn't get cleared instantly. They might actually have to get it in a different price level to get filled. So that's why it's called accumulation. So they're accumulating their positions, right? The goal is when the news gets released, then retail traders, at least with those that are technical savvy, they have that understanding of technical analysis, they'll participate into that breakout once the news is released. And that's participation phase. So people that are well informed, they get in at a good price. Then, probably the more intermediate advanced traders, they get in during participation, right? Because they know what to look out for. And the third phase, it's red. It's also called distribution. So the logic here is that, okay, people accumulating there would get out when the market is actually really moving very, very quickly. But here's the catch, right? Public enters there because they're receiving outdated information, right? Maybe they saw the news late. Maybe they read the news half an hour later. Maybe they get they get the news about a minute or two late. Then they're going to be part of that distribution. They're not going to be getting at a very good price. And this is why I say this is not beginner friendly, because are you going to be able to make that decision, right? Are you able to click and jump during participation? Or are you going to be there wondering, oh, should I open the position and whatnot? Then, price rallies up, you get at the very top. And then all of a sudden the market just flips back, because people that accumulated at a good price, they look at retail traders coming into the market where everyone else starts swarming the market. They pull out, they get out, they use that liquidity to get out from their positions, because they're looking for supply in the market, right? If people are looking for to buy into a position, then price continues to go up. It basically means that a reason why prices could go up, because they might actually not be a lot of supply. And those people buying at the very bottom there, they start selling their positions, right? They say, hey, you want to get in? Okay, here's my position. I'm going to take my profit. Feel free to continue riding the market and whatnot. And then typically what happens is, because the big funds pull out, the market just kind of reverse, right? So you got to be really careful in terms of how the market moves, right? We typically want to get in at number one and number two. And if the market just kind of just run off, then we don't react to it. We want to skip the trade. Simple as that. Okay? Okay, so some general rules for news trading. So before the news, you want to study the market context and also the dynamics of the currency pair that you plan to trade. You also want to review past reactions to similar news releases to identify behavioral patterns. You want to mark down the key support and resistance levels on your chart to anticipate breakout or reversal zones. You also need to define your strategy as well, whether you are going to be trading the news spike, or you're going to be fading the reaction. And then you should have an execution plan, right? So what's your trading time frame? If you're scalping the market, then stick with the 1 to 5 minute chart. Intraday, then you want to be looking at 15, 30 minutes chart. If you're going to be swinging it, then obviously 1 to 4 hours is going to be your preferred chart. You should also control your risk as well. You need to determine the maximum acceptable loss per trade and then apply the proper position sizing as well. You should also be using stop losses and trading stop loss for protection in high volatility conditions, okay? I don't like setting up order with the stop loss immediately during news releases because I need to see where the market goes, right? But once the market starts going, then yeah, I would use my stop loss. I would use my trading stop loss. I would like to move my stop loss to break even. That would be the best case scenario. If you're able to move your stop loss to break even, then it'll be a risk-free trade, okay? You also need to decide whether to trade in the market for a short term. Are you going to be staying there for 1 to 15 minutes? Are you going to be holding that position longer than that, right? Typically when we say, holding on to the positions mean holding on to more than an hour. Typically I get out within the hour for news trade. And if I can get out within the first 1 minute, I would do that. If we can get out in 30 seconds, I would love to do that. But typically we kind of reassess our positions every 15 minutes once trade is running, okay? All right. So let's talk about pending orders first before we go into the strategies, because you need to understand this, the definition between the buy stop and the sell stop, the sell limit and the buy limit. Otherwise, you're not going to be able to figure out what to use, okay? These are your 4 most used pending orders. So let's talk about the buy stop first. The use case for this is that when you expect price to break above the resistance and continue to rise, this is when we want to use the buy stop. The strategic intent here is that you want to enter on a momentum breakout, which is a trend continuation. And for example, if price breaks above 1.10 on the euro, then you want to buy at 1.005, expecting further upside. If you had done that, then yeah, it's good. And the euro is now at about 1.18, 1.17. Sell stop is the opposite, right? If you expect price to break below support and continue falling, then you want to use the sell stop, right? So you want to enter on the downside breakout, which is a trend continuation as well. Now, example here, if price breaks below 1.0920, then you want to sell at 1.0915 for trend to follow through. Let me get some order first. Or, if you're not expecting a breakout scenario, if you expect price to maybe pull back, retrace a little bit, then yeah, you want to use the limit orders, okay? So for example, the sell limit here, if you expect price to retrace upward into a resistance, and you expect that resistance to hold instead of, that resistance to be broken, then you want to use the sell limit, and you'll get a really good price up there before market reverses, right? So what are you doing here is that when you want to catch a pullback before a downward move, then you want to use the sell limit. Simple as that. Now, buy limit is the opposite for this as well. If you expect price to pull back into support and then bounce upward, then you want to use the buy limit. And the logic here is that you want to enter at a discount during retracement. So if price is falling towards support, you place a buy limit near the zone there. And if price bounces off that support level, then you'll get in at the very base of it. Okay, so simple as that. So defining the difference between stops and limits, if you're thinking, okay, I want price to break out and then continue, then use the stop orders. If you're thinking, okay, there's a reversal, there's a potential bounce happening, support and resistance is going to hold, market has been trading inside a very particular range, then you want to use the limit orders right around this support and resistance levels, okay? Okay. So those are the pending orders, right? It takes a while, so I would really suggest that you maybe screenshot this, print it out, stick it to the wall. It's just more of a cheat sheet, right? Because it does take a while, especially if you're new when it comes to trading. This terminology, it does take a while for it to kind of click a little bit, right? Because it's not intuitive enough, because when we say, oh, I want to buy on a breakout, but it says stop. So yeah, some people actually get confused. Okay. Okay. All right. So this is the strategy that we use during our live trading session, and you're probably going to be seeing this again on the 15th when we trade our live trades. I typically use the straddle strategy, and this is the buy stop and the sell stop strategies. And the reason why we talk about the accumulation phase before participation, because we want to have our orders when there is that corridor of volatility, when the market moves in a range bound market condition, it's not trending, then yeah, that's when we can actually cage the market. We can place a buy stop above the range, we can place a stall stop below the range, and the logic here is very simple. It doesn't matter what the news is, whether it's actually good news or bad news, market will react to it. Okay, the reason why we cage it means like we are flat, right? We don't really have an opinion. For example, maybe I'm a little bit neutral. Maybe I don't want to delve too much into the fundamentals. I don't really want to delve too much into the technicals. This is the strategy for you. Okay, market's flat. It creates a range. This is what we call the corridor of volatility. We can place a buy stop above the range and a sell stop below the range. And the logic here is, if the market goes up, if the reaction to the news pushes price up, then it will hit the buy stop and run very quickly to the upside in one go. Now, once that happens, for example, in this case, then you need to immediately cancel the other order, because you don't want to have two orders open. Because what happens here is that if you have that two orders opening at the same time, and the market goes up and then goes down, it will actually trigger both the buy and the sell as well if you have a hedge account. Okay, you can actually perfectly hedge yourself in the negative if that happens. Okay, so just be mindful of that. So with the buy stop and sell stop strategy, for example, in this case here, market news, news got released. Market reaction to that is that, okay, it pushes the euro up, and then it hits a buy trade, it hits my buy stop, then I'm actually going to be in a long position. I am buying the euro at this point in time. So when the market rallies up, look at where we got in at 1.0950, psychological price level, beyond the range that we have. And all of a sudden it just jumped up, 40, 50 pips from where our point of entry is. Then yeah, all of a sudden you're already 40, 50 pips in the money for that position. Okay, so once this happens, you need to place your stop loss. You need to close. You need to cancel the other stop orders. Okay, so you don't want to have two pending orders. You only want to have one when one is already triggered. And that's basically what we do during live trading sessions. Okay, so once it's really out of the range, then yeah, you can move your stop loss to what we would call the break even. Then, if the market reverses back, your stop loss is going to be at your entry point, so you're actually not risking too much. And this is the ideal scenario, and it's good. It's a good, I wouldn't call it pattern. I think it's a good habit if you are using this strategy a lot, right? As much as possible, we want to reduce our risk. If we can turn a risky trade into a risk-free trade, then yeah, I would go for that risk-free trade anytime, But when you open the position, it's not going to be a risk-free trade, because you have your target, you have your stop loss. It's not going to be a risk-free trade. But given the opportunity, if you can move it into a risk-free trade, then I think it's a habit that a lot of traders are just lacking right now. Okay. So let me give you a quick example. So for example, a buy stop here, if we take a look at the, sterling is probably not a really good example here. I think for gold, it should still be in a range bound market condition, right? I'm just gonna go up a little bit on the 4-hourly time frame here. Actually, I want to go on the daily time frame. This is just an example. Don't take this trade, okay? I just want to illustrate to you what are we looking out for in terms of a range. So, for example, I'm not going to be trading news using the daily chart, but just to give you an example in terms of what kind of range are we looking at, this is the range for gold, right? And this has been the range ever since April. we haven't broken out of that range. You know, if I were to zoom out, you guys can see what happens here, that the market goes up and then it goes flat. You know, if we take a look at the patterns that we have here, it goes up and then it goes flat. Then if it breaks to the upside, then it will continue the trend to the upside. So, but because it's neutral, I don't know if it's actually going to break to the upside or is it going to break to the downside. So what I can do here, I have that range. What we can do is I can right click on the chart if you're using PC, and then you go to trading, then you want to create a buy stop. If it breaks that resistance, if it breaks that range, then it will probably rally up, then I'll be in that trade. But if it goes down, then I want to be placing a sell stop as well. Now, why are we using pending orders? Why are we not opening the trade manually? Well, we're nowhere near that. We're nowhere near that upper range or near the lower range. We're kind of in the middle at this point in time. You know, maybe I'm going to be away from my computer. I'm not going to be able to trade. But once you set up your orders like so, you can look down here. We got the buy stop, we got the sell stop. Then you can leave it. You know, you can probably go travel around the world for a month because this is a daily. And even when you're not connected to the internet, as long as the order says pass on to the broker, they will execute that trade for you when price hits those order levels. Okay, so that's the advantage here on using a buy stop and sell stop. Okay, we got no news releases here, but this is the reason why I say, you know, just assume this is a 1 minute chart or 5 minute chart, and there's going to be a news coming out in about 1 or 2 minutes. Then we want to wait for that breakout to happen. Simple as that. Okay. All right, let's move on to the sell limit and the buy limit strategies, right? With this one here, I would say this is definitely not beginners friendly, right? For that buy stop and sell stop, you can just ignore everything and say, hey, I'm neutral. I'll go where the market goes. You know, that's the reason why people use the straddle strategy. But the buy limit and the sell limit strategy means that you have a certain knowledge. Either you have an information that puts you in the thought belief that that resistance is going to hold, or you have your technical analysis and you look at that and say, hey, you know, I look at that, that's a very strong resistance. You know, what if price goes back into that red box there and a lot of sellers come into the market? And this is actually the case with what we have up there, which is what we call the order blocks. Okay, if you want to know more about it, then watch the SMC videos. Okay. So if we have that technical knowledge and we look at that and say, hey, that was the previous high. That's also a psychological price level. It is at 1.1075. Maybe it'll hold. But there's also another block up there. Okay, I want to sell, but price is already dropping down. Then it's not a good place to buy in, right? So I'll say, okay, what if it comes back to test it and it fails? Then yeah, I think that would actually give us that confirmation. It's going to be a strong resistance. That's where I want to sell. And this is where you place that sell limit order. And what happens here is that once price touches that sell limit and immediately comes down to the downside, because a lot of people are also going to be looking at that and say, hey, that is resistance you need to watch out for. Okay. So those are the stuff that you need to understand. This is the reason why I say it's not for beginners, because if you have limited knowledge in terms of understanding the right resistance and support, it might not work for you correctly, because you really need to understand price movements here to be able to do this, okay? But the advantage here is that when you open a position near resistance, when you open a position near support, your stop loss is going to be really small, because you're opening at resistance to sell, or maybe you're buying near support, right? So your stop loss is going to be small because you expect that floor or you expect that resistance to hold. The risk reward ratio is just much greater with this kind of strategy. It has its advantages, but it's definitely not beginners friendly. Okay, so let me give you an example here. I might actually switch out a little bit here, so I want to show you what happens here. We actually did live trading sessions. Unfortunately, it wasn't in English. It was in Bahasa, Indonesia on Tuesday. But this is the one trade that we were kind of anticipating. Now, if I were to go back a little bit and show you what happens here. So we're looking to sell on the sterling, but the level was way down there, right? Because if I were to go short here, it means my stop loss is going to be way up there. Risk reward ratio just doesn't make sense. Now we're looking at the Ichimoku cloud as a potential resistance, and we look at that and say, okay, I want to go in short, but I don't want to go in at this price. Let's wait for price to pull back and gives us a much better price. It's going to test 1.36 and then it's going to go down. And that's basically what happens here. That's basically how the market plays out. You can see what happens there. Market does pick it up a little bit, right? Once it touches that level here, look at what happens next, right? It's not pushing up higher, and in fact, in the past few hours, it starts going down. If I had shorted here, if I had settled the position there, then I would actually still be in negative because I'm getting it at 1.3538. Price is now at 1.3562. But because we waited and we want to place that limit order up there, that we got a good price. We literally, that's where price never breaks above. And then it just drops down really quickly. Now, if I see this move far away from price, then I can start moving my stop loss to break even. Now I'm risk free. But yeah, that's how we do things with the limit strategy here, is that we need to figure out from a technical perspective, or at least you need to have some knowledge to be able to figure out how it works, okay? So let me give you an example here, maybe on the Euro USD. Let's do a 50 minutes time frame here, and price is really pushing to the downside. Is it really pushing to the downside intraday? It might actually bounce a little bit because we have a little bit of a floor happening right around there. So I would say, maybe if price tested that level as a support, it could actually bounce. So I would actually place a buy limit. That means I want price to come down to that level, take my buy, and then goes back up, That's basically how we get the buy limit. And with the buy limit and sell limit, we typically do one pending orders. We don't do two pending orders like the buy stop and the sell stop, okay? But again, you need to have some sort of understanding before you can actually do this. Okay, so you can also trade the news after, you can trade after the news is released as well, so it doesn't have to be during news releases. But typically after news releases, we use a lot of the limit orders instead of the buy stop and the sell stop orders, okay? Okay, so we're kind of running out of time a little bit, but let me just give you a quick test. Hopefully you guys, still watching this can answer this. This is actually a very quick test to see if you're ready for news trading. If you see a surprise rate hike from the Fed, which assets are likely to spike? And what would you avoid trading? Again, the Fed is the US central bank. If you see that US central bank making an announcement, what assets are likely going to be impacted? Okay. If the NFP report is due in 10 minutes, what kind of pending orders would you place and where? Assuming in the question itself, I don't know what the consensus is. I don't know what the sentiment is. What kind of pending orders are you going to be placing for question number 2? Question number 3, if price breaks below a major support level right after that CPI release, would you use a sell stop or would you use a sell limit, and why? Okay, this is a little bit of a trick question, but read it carefully. If price breaks below a major support level after the CPI is released, would you use a sell stop or would you use a sell limit? Okay. Now, last one is that can you name all 4 types of pending orders and match them to the most ideal news scenario? So I'm gonna pause this for a minute in terms of my microphone. I'm gonna leave you for about a minute and I'll come back to get some of the answers. It'll be good if you can participate and answer this, then we know what kind of readiness in terms of you for news trading, okay? Okay, not getting any answers. Maybe you guys are shy, but let me give you an example. Okay, if you see a surprise rate hike from the Fed, what would you be trading? You would be trading anything that has to do with the US dollar. You would definitely be trading the stock market. The initial reaction to a surprise rate hike from the Fed would be a sell-off in the stock market, because we're going to be looking at a sell-off in the equity markets. That would mean a risk sentiment that goes negative. A rate hike, a surprise rate hike from the Fed would strengthen the yields, it would strengthen the US dollar, it would weaken the euro, it would actually weaken the sterling as well. So you would actually want to go long the US dollar. Now, if the NFP report is due in 10 minutes, you have no clue whatsoever in terms of what the number is or what the market is expecting. The pending orders that you want to place is a buy stop and a sell stop. And where? On top, above, and below the range that is established. If you don't see the range, we don't place the buy stop and the sell stop orders, and that's how we filter things out every single month. We look at some of the assets and say, oh, this is not tradable, that's tradable, this is okay, that's not okay. Okay. Now, if price breaks below a major support level after the CPI is released, would you use a sell or would you use a sell limit? And the right answer to that is you would actually use a sell limit. You wouldn't want to use a sell stop because it was broken during news release. So if after the CPI release, the market drops and breaks support, what you want to do next is you want to hold off going short. You want to wait for price to pull back and test that broken support first, and then you want to sell if it held as a resistance. Okay, because support will turn into resistance, resistance will turn into support, so you just want to wait it out and get a much better price, and that's the reason why. Simple as that. Okay, so the four type of pending orders that we have discussed tonight is the buy stop and the sell stop orders, and then we have the buy limit and the sell limit orders. And most ideal news scenario is if you trade post news, typically we use the limit orders. If you trade during news releases, then we typically want to use the buy stop and the sell stop orders. Okay. All right. So this is I haven't updated this. I keep forgetting it. The code is non-farm 2025. So let me just go back to this one here, so you guys can actually look at that. This is the code. It's non-farm 2025. If you want to use it to double your deposit bonus. All right. Okay. I think we got about a minute or so, but if you have any questions, I don't think there's any questions. I think we are over time a little bit, but it's okay. But yeah, if you have any questions, feel free to ask now. Otherwise, I'll see you next Tuesday, where we are going to put everything that we talk about into practice. That's going to be our CPI numbers. We are going to be trading the US inflation number, and that's going to be on Tuesday. For those that are new and wondering, oh, what is the CPI and whatnot, don't worry about it. Before we start the session, we got 30 minutes to kind of put everything into perspective. We can take a look at several scenarios. We can also discuss some of the theories behind why we're looking at the CPI number. What could happen if the number is actually higher, or is it going to be lower? How does that impact the market? Okay, so 30 minutes before that, before the release, then yeah, because the release is always in the half hour, in the midway during our live trading sessions. Okay, so we have time to kind of set up our trades. We have time to talk about the context of the fundamentals on the macro stuff, and then the rest of the sessions we're going to be trading it live. So that would be on the 15th. That's going to be on Tuesday. It will be at 8:30 a.m. New York time. Adjust that accordingly to your location. But hey, I mean, you're already here on Octa FX, Octa Broker YouTube channel. Just click on the upcoming live sessions, set a reminder, subscribe, and that's pretty much it. I'll send you guys a reminder that you're not going to be late for that inflation number that we are going to be trading live on Tuesday. Okay, so I think that's our time for tonight. Good luck to trades for the rest of this week. Have a fantastic weekend ahead, and I'll see you next week.